Hello, and welcome to Measured Thoughts. I'm Dave Reibstein. Today, I'm joined by Ashley McEvoy, who is president of McNeil Consumer Healthcare. Welcome. Glad to have you with us today.
Thank you, Dave. It's a pleasure.
So, McNeil has tons of well-known brands, but maybe people don't know exactly who McNeil is. So tell us a little bit about McNeil.
Sure. You know, McNeil is a little gem. It started on the streets of Kensington in Philadelphia, a small family-owned pharmacy in 1879. And really, in 1959, Johnson & Johnson acquired it from the McNeil family. And soon after began to build a tiny little business into, a multi-billion-dollar global business as it is today.
President. I'm impressed. So tell me, what was your path? How did you get to become president?
Sure. Dave, I started actually in Philadelphia. I was born and raised in Philadelphia in the suburbs, and joined the University of Pennsylvania in communications and jumped into the advertising business and really started my career in communications, really learning around strategy of brands and how to build brands. And spent some time in New York City and some time in Europe. And about 11 years ago, joined Johnson & Johnson at the McNeil Consumer Healthcare Company.
And what was your position right before you became president?
So right before I joined, took over the president's role, I was the vice president of marketing for 3 years for McNeil Consumer Healthcare.
Is that fairly typical within J&J, that's the path towards the top?
Yes, I'd say that, J&J, which is known for really building leaders, the traditional path is coming from the vice president of marketing. I do think we are seeing new models come in where we have very strong vice presidents of operations, vice presidents of sales, who are starting to get those chief leadership positions as well.
Yeah. So I mentioned there, McNeil, a company of brands. What are some of the products that are within McNeil, and how has that changed over time?
McNeil Consumer Healthcare is the leading manufacturers of over-the-counter medicines around the world. It's about a $4 billion company globally. I'm accountable for the U.S. business, which is about $2 billion, and I'm also accountable for a lot of our global innovations. Some of our leading brands that consumers know and delight off of our Tylenol, it's a $1 billion brand, as well as soon-to-be Zyrtec, which will be one of the largest RX to OTC switches for Johnson & Johnson and for the market, as well as...
So just for those that don't know, what is that?
Sure. Zyrtec is the leading allergy prescription right now, and we will be making that available to consumers without a prescription at the end of January.
Very good. And as more brands are added to the portfolio, all of them are going to be within the healthcare domain?
That's correct. Right now we are, and we'll get into some of the conversations around how you build growth and how do you inject profitable growth into particularly in fairly developed geographies. But we have a very strong baseline of some leadership positions in the pain category with Tylenol, in digestive health with a brand called Imodium, leading brand, in some of the pediatric categories, children's Tylenol, children's Motrin, and now in the upper respiratory category with allergy being one of the fastest growing segments in all of upper respiratory with the launch of Zyrtec.
And do you have some objectives that are sort of business-wide that cut across some of the different product categories?
Sure. What do we look for in terms of overall growth? It has to do with, one, brand growth and improving the health of our equities, but importantly, delivering profitable growth for shareholders, for Johnson & Johnson as well. And so there's a balanced discussion that happens around portfolio management. And right now that resides in one vice president of marketing. And that vice president of marketing is solely accountable for making the portfolio decisions around what are growth brands, what are high growth brands, what are rising stars, if you will, what are profit generators, and what brands are more in maintenance. And the whole enterprise lines up with that to make sure that the GP targets are aligned, that the R&D budget is aligned to that, and so that we deliver really on profitable growth while improving the brand health of these equities.
So I want to make sure that, a lot of people use growth as an objective, but I want to make sure when you talk about growth, you talking about growth in profit, growth in revenue, growth in what?
Yeah, when I talk about growth, it's really a balanced scorecard. I'd say it needs to be top-line sales growth and consumption growth, and then after-tax net income growth. And really, those are the three predominant metrics that my entire management board is accountable for. And in particular, the vice president of marketing is also accountable for.
So sometimes those three can be in conflict with each other because,
Right.
Volume growth,
Right.
You just talked about, and revenue growth and profit growth. So do you prioritize which of those are more important?
I think that's where it comes with planning, Dave, and it comes with a 5-year strategic plan that we work with, and we, in essence, set growth targets on all of those measures. So we say,
Growth targets. So are they
Sure.
profit growth, revenue growth, or are they across all of them?
It really where we'll start will be revenue growth around where is there growth in the marketplace, and then consumption targets will follow from there. And based upon that, we'll look at the portfolio mix of profitability and set some profitability targets.
You've stimulated a whole bunch of different thoughts on my part because you came from marketing. Mm-hmm. You're now president. And one often thinks about the marketer saying, what I'm interested in is revenue growth. Mm-hmm. Has that changed when you became president, or is it still revenue growth as number one objective?
Yeah, I think that there's a good controversy that exists in the demand industry,
Right.
if you will, and I'm using demand for marketing and sales. And we've gotten success from a model of delivering predictable performance, and I'll start there, is when our marketers are accountable for the P&L, and they make P&L decisions. And what do I mean by the P&L? I mean the top-line sales growth projections, I mean the GP, and I mean the bottom-line after-tax net income. And when they're accountable for that, they can work throughout the company, a lot of the enterprise leaders, to deliver the enterprise accountable metrics of sales and net income.
And when you say enterprise, you mean McNeil?
I mean the entire operating company of McNeil Consumer Healthcare.
So, and that sort of raised in my mind the question of trying to think about, are your objectives set at the McNeil level, or are they coming from J&J that sort of says this is what it is we're expecting from McNeil, and here's the objectives for McNeil?
Right. Well, it's both. It's a top-down and a bottom-up approach, to quite honestly. And where it stems from is a good old-fashioned living and breathing and usable and aligned strategic plan where every business within the Johnson & Johnson portfolio of companies sets a vision for the company and says, this is the categories we compete in. This is what I can deliver over a 5-year period of top-line sales growth. And this is what my net income commitments will look like on a 5-year basis. And you get philosophical alignment from Johnson & Johnson to say, that's what I can go deliver. You then work on the mix of that, which are, portfolio management between your core base business, what products you might have to go acquire, what geographies you might have to extend into. And, a key driver of that discussion is the vice president of marketing.
So J&J is very well known as being decentralized. So you're pretty much autonomous to a large degree, other than here's what it is that we can deliver, and therefore we go ahead and operate in our own way.
Yeah, I think Johnson & Johnson's track record of success, over 20 years of delivering continual, improvement, and with the over 20-year shareholder value has been ensuring that the companies are the closest to the consumer and operating on a decentralized basis. Over the past 5 years, you have seen Johnson & Johnson use more leverage in the back office on some enabling functions, again, to be competitive, to make the P&L work and take costs out of the system while remaining true to offering value to our end users, being the consumer.
So back office leverage, anything else that's done to coordinate the different J&J business units?
You'll see of recent some new restructuring within the organization, particularly within some of the sectors called the pharmaceutical sector and the MD, medical diagnostics and device sector, around going after, we'll call them therapeutic areas of excellence that are patient-based to offer new value to those consumers and to those patients.
Okay. I wanted to get some understanding of sort of J&J and McNeil and that relationship, and then overall setting what those particular objectives are. I want to now make a transition to trying to think about the role of marketing within McNeil.
Okay.
And describe for me what you see as the role of marketing for McNeil?
Sure. So what I expect out of my vice president of marketing is really to deliver profitable growth and to build great brand equities. And those are the two core metrics that we look at on a continuous basis. And at the end of the day, I think there's a healthy balance of, bringing science to the art of marketing. And so there's a lot of analytical rigors to make sure that you're making the right portfolio decisions. But at the same time, there's a lot of art because, the consumer is forever changing, and a lot of the core metrics that are used today and measurement tools aren't as keeping pace with where the consumer is today. So that's really where the art piece comes in.
Yeah, I'm going to want to explore with you what some of those metrics are.
Sure.
But before I do, if I had asked that same question of your vice president of marketing, what would he or she have said about sort of the role of marketing? Would they have said, yes, it's to, revenue growth and profitable growth and development of brand?
Right. I think that they would say, I'm chartered to grow sales, to grow consumption, and increase market share.
And brand?
Increase market share.
But how about building the brand's value?
They would say
are those one and the same?
I would say, if I would talk to our marketers, would be that they are accountable for building profitable growth, not just year one, but over several years, and of increasing brand equity value. And we do that through looking at how brands, what the health of the business is from a short-term basis and a long-term basis.
It's easy for us to spend our time talking about marketing. I'm curious about the chief financial officer. And what would your chief financial officer say about the role of marketing at the company?
Yeah, I think, that's actually, you'll see a little bit of, I'd like to say, a nice special model with McNeil because it's very enterprise organized. It's maybe it's a conventional company, but we run it by a management board, and it's very clear what the metrics are from a total company point of view. So marketing's role in delivering profitable growth and improving brand equity, finance has been pleased, I'd say, over the rigor of analytics that have become much more sophisticated, particularly in the marketing discipline over the past 4 to 5 years. And so, we have better visibility to ROI. We have better visibility to being able to redeploy a P&L more fluidly, more on a monthly basis versus typically it used to be an annual planning basis. Mm-hmm. So I think that our financial officers are quite pleased.
Are you getting a monthly ROI?
We get on programs monthly ROIs.
Wow. So finance does not look at marketing just as an expense. They understand it as this is this long-term investment,
right,
and here's the return that we're getting, even if it is not that month or that quarter.
Yeah, I mean, again, if I look back at what's garnered success for McNeil over the past 49 years, it's the enduring value of brands. We've built Tylenol, which is $1 billion brand that's had generic competition for 40 years, and it's still $1 billion brand and growing. And the only way you do that is you continue to innovate and, you price it right, you bring consumer delight and an experience. And so McNeil is very much a demand-driven organization.
The other thing that you mentioned is you've got this great analytic capability now to assess what you're getting from your marketing spend. Yet you also describe this art. Mm-hmm. And does the CFO capture and appreciate the art to it as well?
I think there's always a natural tension between the financial community and the marketers.
Right.
And so I like to play upon each other's strengths. So you'll see them smushed together in a lot of core processes throughout the company. And so they're not doing each other's job, but they're complementing each other based upon a unifying goal. And, if you would ask me, I think the finance community has been a lot more pleased because there's a lot more science to marketing now that's more fact-based. And, my personal bias, I've got a more itch of getting more of the art back into it at times, which is more difficult to measure. But when McNeil is in a privileged position of being in a leadership position, so we need to, if we're not bringing new ideas and new growth and transforming categories, then who's going to do that?
Okay. And just to complete back with what we were talking about earlier, how does your vice president of marketing relate to the other vice presidents of marketing for the other J&J businesses?
Sure. So Johnson & Johnson operates in a very decentralized fashion. So there are about 260 different operating companies. all of those tend to have a vice president of marketing, and it's very informally based that the vice presidents of marketing will work with the other vice presidents or other folks in the different companies to create value. You know, the big J&J term we use a lot is convergence. So if we're trying to offer a diabetic patient new solutions, we've got businesses in the nutritional space called Benecol and Splenda that are part of the daily routine of a diabetic patient, as well as we've got some cardio protection, and we're also LifeScan in the meters, diabetic meters. So how can, 4 different J&J companies, converge together, share ideas to create new value to consumers?
So what interaction, what learning, what sharing goes on between the different vice presidents of marketing?
It's really, Dave, it's really more informal. So they'll set up, it's really more project teams. So if there's a diabetic team that's organized, we'll figure out what companies can offer the most amount of value, charter it, and it'll be reviewed either at like a president's forum that we get together and talk a lot about sharing talent, or sharing very select Johnson & Johnson growth initiatives that touch more than just one company.
That's very similar to what we were talking about off camera,
right,
when you and I were talking about being customer focused,
right,
and I really like that notion, so that's good.
Right.
Okay, so what we've covered so far is we've spent a little bit of time trying to think about sort of the role of marketing,
right,
and then the overall McNeil organization and what you cover. I want to get into thinking about the marketing budget.
Okay.
And what's the process that you have for trying to create a budget for marketing?
Sure. It starts with the strategic planning process where you'll set top-line sales targets and, after-tax net income targets. And part of that is, we call them brand marketing expenditures, BMEs, which is basically advertising and promotion, non-working. And so there's in essence a very philosophical alignment as this is what the business is going to need on brand building to go deliver that sales target and go deliver that net income target. And the person who owns that budget 100% is the vice president of marketing. So
where do those targets come from?
So those targets are created from the operating company. So from my leadership team on my management board, of which the vice president of marketing is on the company's management board, where we'll go through an external environment. On an annual basis, we do good, I'll call strategic rigor of a good 10-year look, and then a 5-year look and a 3-year look. So those growth targets are, I'll say 80% there, and then you've got 20% tweaking because when you look at it on an annual basis based upon marketplace factors.
Okay, I'm going to want to push that a little bit more to get specific on here's where we currently are.
Okay.
I see the category is growing by 5%.
Okay.
I'd like to increase my market share.
Right.
How much I'm going to be able to do that depends on what budget I get.
Okay.
So that I really want to understand.
Is it
so I'm not looking for the numbers.
Okay.
I'm looking for how. I'm trying to get some sense of how one goes about creating that budget. Those targets.
Those targets. Okay. So, how we at McNeil go about setting targets and then achieving targets. You first look at your current portfolio, what categories you're competing in, and what kind of growth rates you can expect within those categories. And, for us, again, since many of our...
And that's category. Sort of category growth. Here's the category growth that's going to happen.
Right.
Then there's a market share growth.
That's where it's going.
Okay.
Yeah, that's okay.
Okay.
So at McNeil, really what we do is we look at first, what can I expect the categories to deliver over a 5-year horizon, and then on an annual basis. And for most of my portfolio, 60% are in leadership positions. We need to outpace the category on a 2x basis. And so if we outpace the category on a 2x basis, what does that translate to in terms of sales? And our expectation is that we are always, outpacing the category by twofold. And then from that, delivers a certain bottom line commitment, and you go to the mix change. So some of my higher growth businesses need to be 4x the category. Some of my profit generators need to just barely keep pace with the category. And those portfolio decisions are heavily vetted and heavily analytically oriented, and outcomes, really some goals by total company and then by brand, by franchise.
Okay, so I get that. So category is growing by 5%, therefore we got to grow by 10%. Then you back that in and say, how much money do we need to have in our budget? in order to accomplish that 10% growth.
That's correct.
Yeah, okay.
So a lot of it goes into, depending upon the category growth rate, the size of your business in there can dictate the spend. If you're in if you have a tremendous amount of critical mass or scale, you can have a more efficient spend than some area that you're in, in a startup mode, in a brand that we call a rising star brand.
Right.
And you will portfolio manage your marketing dollars based upon what the sales targets are and what place you are on on what we call an X and a Y axes on leverage.
So how does one go about trying to figure out, and maybe that's all the analytics, of if this is my goal, here's how much I need to have in order to accomplish that? Yeah,
so we have, again, over the past 4 years, we've really built a capability of doing a lot of that modeling. It's good old-fashioned modeling that, you have direct visibility to what your trade-offs are, and we always look at what optimal spending is and then what a critical threshold spending is. And the plans are organically built to go deliver that. So, 4 years ago, Dave, we used to sit and do, I'll call them bottom-up charts with infinite amount of spending. And what ended up happening is when we reconciled really what we have to be delivering financially, there was always a huge gap. So really what we've done now is synchronized a lot of that analytics from the very beginning of a strategic plan to then an annual business plan, and then the marketing plans come right out of that. So they're really brought up more up front in the financial planning process.
And that analytic modeling you're referring to are sort of marketing mix models?
A lot of it actually has to do first with category projections and where are we on the competitive advantage of leverage and scale of startup, which then decides what kind of spend you need to generate those growth rates. And we'll start there. We have some really good supply folks who can help you with GP and plug those in, but we really start with market.
So a lot of my observation about marketing mix models is that they do a good job of sort of this instrument works better than this other instrument. Promotion works better than advertising. But is it the other analytics that you have that helps determine the actual budget size that you need? Is that where that comes from?
Yeah, a lot of it starts to, before you get into we use marketing mix, but that's really a how, not a what.
Right.
And, to really ascertain what the whats are, we really start with, what categories are we competing in? How fast can we grow those categories? Is it a 4x sales multiple? Is it a 3x sales multiple? Do you need to spend at a 2x sales multiple based upon where you are in the market? Are you the number 1 brand or are you the number 3 brand? And after the whats are decided and aligned to, then we have some tools which help us know are we on track or not. And do you have to fluidly redeploy? If I have $1, am I best to spend that in advertising or am I best to spend that in healthcare professional marketing?
You make this sound like it really works. But I've got to believe that, we can look historically what's happened. All the analytic tools tell us what has happened, but what happens in the future doesn't always fit, right? So there's a lot of noise in this system too. So sometimes we exceed what our goals are, and other times, we're running into difficulty. Are there a lot of adjustments throughout the year? So, we got to cut here and we need to add over here? Or is that, what's sort of the annualized cycle or the time spacing on that?
Yeah, I'd say probably the biggest transformation that I was a part of, when I first became Vice President of Marketing 5 years ago, you were doing a good old-fashioned business review maybe once or twice a year, and you were sticking with your plan. And a lot of what's became more readily available, and quite honestly at McNeil we've invested in building this capability, was what I refer to as a lot more fluid P&L redeployment. And what I mean by that is a lot more brand redeployment, marketing expense redeployment. Particularly when, sales forces have changed dramatically. And so, what first and foremost, it's around having my marketing team and my sales team together in a room driving off of one combined dashboard. And they do that on a monthly basis. So they'll look at sales, they'll look at consumption, and they'll look at then the causals of consumption. And they'll go through drill downs of, household penetration and buying rate, and then they'll get into share of shelf, share of trade promote, and every, what we like to say are leading in-process indicators. We've identified some causality to how they impact outcomes. And it lets you drive off of, we call a red, green, yellow chart, what's working, what's not, and rather than wait 6 months to redeploy, half the year's gone.
Right, so that when you say red, yellow, green chart, that sounds like your dashboard.
Right.
The key metrics that are on your dashboard, penetration level,
household penetration, buying rate.
Buying rate.
And again, a lot of times those are outcomes. So we even drill down to, we've done in-process advertising is one of our key drivers of our brands. And so how effective is your advertising, not just on, typical ASI fashion on recall and persuasion, but in building brand health. We've been able to tie a short-term metric really with a long-term metric over the past 3 years. And it'll let you know what the equity building potential of copy is. And then we look at good old-fashioned share of voice, share of market. We look at a lot of share of trade promoted dollars. We have different time periods and different metrics around, how can you quickly redeploy and make good informed decisions about managing the portfolio.
And are these measures visible across the entire organization or visible just to the senior leadership, or what level is the visibility? So
really depending upon form. So we'll have the vice president of marketing, the vice president of sales will come together on a monthly basis and go through like a performance review. And they might drive off of one dashboard that has 20 different metrics. I probably look at the 5 of those metrics, and their brands probably look about 25. So the more, we also have my management board takes the top 5 outcome measures, and they're looking at.
So which of those outcome measures?
So I'll be looking at sales and consumption and market share, household penetration, and buying rate. And then if one of those are red, I'll drill down to the other 5 causalities. So I'll look at, do you have effective copy?
And you look at that brand by brand. Does it roll up to a McNeil dashboard, or do you keep it disaggregated at the 20 different brand level? We
look at it both ways, Dave. We look at, first of all, what's the total McNeil portfolio? How is it performing versus the total OTC industry in the United States? And then we'll also look at it from a franchise point of view. So I'll look at, the complete pain portfolio versus how the pain market, and then I'll go to the brand. And I'll ensure that it's delivering upon the portfolio grid, outcome measures that we set up in the beginning of the year.
So we just discussed the budgeting process at McNeil. Let's start talking about some of the specific measures. Although you've highlighted some of the measures already, I'm sort of curious in trying to think about measures that you might look at that would be sort of intermediary measures versus sort of financial value that comes out. So that might be measures as they relate to usage. It might be awareness measure. What sort of are the balance between those two, and which ones do you pay more attention to?
Yeah, sure. I think that the way we always look at it first is what are some of the what's, and those are pretty simple. They're classic every company: sales and absolute consumption growth and market share growth. And I'll hold the profitability for now. I'll come back to it because we do look at the return on investment and profitability, not just top line sales. But and then you go into the classic 4 Ps and say, we look at awareness, which we look at awareness, trial, and repeat, and we look at household penetration and buying rate. And where we really gain insight, Dave, is not only are we always vigorously tracking purchase behavior, but on a good annual basis, we'll get a good look at usage occasions. And so what are they buying? Are consumers really using our products like we think they are? And really what that's led us to is reframe a lot of the categories that we compete in. So let me give you an example. So, Tylenol, a brand that we know has been around for 50 years, competes predominantly in the internal analgesics category in the United States. It's about a $3 billion category. Well, Tylenol has about a 17 to 20% share of that category, but the category is flat as a pancake for 5 years.
Right.
But if you really go talk to American consumers and track for the usage occasion everything that they do to either prevent, treat, diagnose, or comfort pain, it's about a $40 billion market and growing double digit. And so it really was a start for us to really track usage that we started to reframe a lot of the categories that we compete in and start to look, rather than what's our share of the internal analgesics category, what's our share of the total pain category.
Okay, that makes sense. Do you look at what are some of your short-term measures and long-term
Yeah, so short term, we'll look more at marketing effectiveness. So what's the return on dollar? When do we have effective copy on air? Do we have effective trade programs? What's our share of shelf? What's our everyday pricing? What's our price gap versus private label? Those are short-term metrics we'll know and guide us that we're influencing the longer-term measures. Let me give you an example. We'll have some in-process indicators on copy testing, and we'll be looking at the longer-term potential of building brand equity, on uniqueness, on relevance, on differentiation. And it's that judgment of looking at the short term as well as the long term.
So several times today you've mentioned brand equity.
Yes.
How do you measure that?
Sure. We look at equity webs, and really what it tells you is from a consumer point of view, what kind of associations and credit are they giving you? So do you stand for, and what are the most important purchase drivers in the category? And we'll look at that, in essence, on a quarterly basis.
And do you compute or calculate in some way a brand equity? You at one point referred to $1 billion brand, and how do you do that?
So $1 billion brand is actually on sales.
On sales.
But if you would look at the value, that doesn't connote the value of Tylenol. And, you learn this with companies buying and selling companies.
Right.
And their sales multiple is a lot more than one-time sales. And that has to do with the enduring value of the brand.
So you're not about to sell Tylenol. But you try and measure the value of the brand.
Absolutely.
How do you do that?
You do it a lot. There's no magic, I'll say, metric that we have figured out right now. What we look at is the strength of, first of all, is consumption. Are we outpacing the category? Secondly, from an equity point of view, we've done a unique assessment over the past couple years where, depending upon what the need states were in the category, I might be telling you 5 different things about Tylenol, let's say, in the year. We've been able to figure out, of those 5 things, these 3 things ascribe the most amount of value for the long-term health of the brand, and these 2 things they need to hear now to compete versus private label erosion. So that balance of the mix of let me stop some of the base from eroding while at the same time delight them with some new messages that will incite new purchase. That's the capability that I've been talking to that didn't exist 4 years ago, that we've just begun to practice.
Okay. Do you compute a dollar metric value of Tylenol, Benadryl, each of your brands?
Can you explain that a little bit, Dave? What do you mean by that?
Do you have sort of internally some way of measuring and say, well, the Tylenol brand is worth so many millions of dollars.
Right.
Next brand is worth so many millions of dollars.
Right.
Do you have a singular measure that tries to capture that?
We don't from a long. We do whenever it comes up to justifying a shift in strategy. If we needed a reinvestment strategy, you say, when we're looking at Tylenol, it's not just a $1 billion brand. I mean, it's 10x that in consumer
so I'm not
value.
referring to the revenue from it. I'm coming up with the value of the brand itself. So, we have these, annual report that comes out in Business Week every year that says, here's the brand value of these different brands.
Right.
Do you do that with your brands?
We do it more on a strategic planning basis, which is really the value of the portfolio, versus a monthly basis.
But so annually you do that then?
Yes. We'll look at, because it's really the decision point around, are there brands that we should be selling? That are sucking up some cash that we need to be reinvesting into our stars. And it keeps keeps your vision around the long-term NPV of these assets. And, particularly in the CPG industry, these are annuities. They're amazing assets that, unlike a pharmaceutical industry where after 10 years something goes off patent and loses 100% of its value in 30 days, these are CPG. If you love and give them nurturing, they'll grow. They'll be steady ships growing.
And do you also calculate the value of a customer? So you've got so many customers,
right.
And every time we convert somebody from a competitor, using a competitor to our brand, they're worth X dollars to us?
Yeah, I would use the word consumer. We haven't done it necessarily from a customer point of view, but what we'll do is from a consumer. So we'll know, what's the value of our chronic heavy user who has a brand loyalty of 70% of share of requirements. And if we can convert 10% of their usage occasions over to, brand Zyrtec, then that translates into this kind of ROI.
Okay, so actually share requirements is a real critical measure for you.
Absolutely.
And so we don't think about, do we get this customer or not? It's share of requirements for each of the particular customers.
Yeah, a lot of the categories that we compete in use multiple products, so it's really switching, and, how do you get more than your fair share of switching profitably?
Okay. How has the role of research changed in your ability to capture sort of the critical measures of your performance?
I think, Dave, a lot of the research tools over the past 5 years have done a masterful job on gaining better clarity, predictability, and accuracy of the science part of marketing. I throw the challenge out to the industry is to do a better job of some of the art. And what do I mean by that? We have a lot more live data that we can instantly redeploy with customers, with consumers on advertising and consumer promotion, now even in doctors' offices. But they tend to be more conventional tools that don't grab onto necessarily consumer engagement. And let me give you an example of that. Use Tylenol as an example, used to spend in its advertising budget about 80% in television 5 years ago, and now spends 50%. Because where are the users? Where are our chronic users? And a lot of them need to be reached on the web or out of home or in grassroots initiatives. And there's not a lot of hardcore science there. So, I always like to ensure there's a balance in the conversation around what gets metric gets done. Because some of the areas that are difficult to get measured are disincentivizing my marketers to place safe bets.
So do you want to keep the art there, or do you hope that you could bring analytics and science into some of that art so that we could translate, some of the online and some of the other aspects that we don't have really captured in current analytics?
I think it's both. I think that, hey, listen, all of the areas where consumers are spending their time, we have to get smarter about how we know if we're connecting with them, and is that a good spend, and is that driving relevance with consumers? But at the same time, marketing decision-making and business decision-making, we tremendously value fact-based decision-making. We've got a lot of benefit on predictable performance from that. But I also like to say it's head, heart, and guts. And you need to have, that's the head part. But you're going to have to use some intuition. You're going to have to use some experience. And be comfortable knowing, based upon the situation, that your ambidexterity is there on all three of those fronts.
So you end up supporting a lot of allocations of budget that are not, defended by the analytics, just because somebody says, I believe this is going to work?
Sometimes.
Sometimes? Mm-hmm. Do you do much experimentation to see what works here and what doesn't, and try and continually learn from that?
We do. We do a lot in customers, I'll say, and a lot in advertising, media communications. We don't do enough in, the good old-fashioned test markets have really gone away in competing in a global marketplace. So we haven't really found a nice new mechanism where we can pilot and experience some early prototypes of new products.
Yeah. And what are you doing? Because you mentioned all these sort of new methods of reaching customers and so forth. What do you do for trying to allocate budget and think about measuring the success of, marketing on the web and marketing in sort of these network environments and so forth? How are you trying to capture any of that?
Well, we have a lot of experimentation funds. So we have about, I'll say about 5 to 10% of the total media budget that will go to new ways to connect with consumers. And it's set up where you volumetrically move. Did you change attitudes? Did you change behavior? So that you can scale the ones that worked and extinguish the ones and discontinue some of the ones that didn't work. And, I'd say that, a lot of times I'll come back to the point around fact-based decision-making. That's enabled us to really deliver some nice predictable performance. But I don't think that you're going to break market structures or break categories based upon some of that. And, I think that's where there's a nice, good, healthy tension between the science has advanced substantially. And actually, for the companies who haven't done that, I'd say go do that first. So start with the basics and go get the science down pat in marketing so you can better understand what you're flying off of, what's your cockpit, where am I taking this plane? Right. And otherwise, what happens is your whole P&L will implode on you. and start there. And then you start to take some liberties around, people with great intuition judgment who are saying, I'm going to try this, I'm going to try that. But you begin your baseline experiment so that you're not taking such tremendous risk all at once.
So there are some times when you end up saying, we're going to go ahead and spend over here even though we don't have any data.
Right. Well, I'd say that a lot of it depends upon, let's use what we think data. Data doesn't always have to be volumetrically basis tested. And I think that the world at our disposal right now has a tremendous amount of data. And you can go pick up and go look at, not everything has to be custom. There's a huge amount that you can learn from other industries, other people, and within Johnson & Johnson, that's where you can get a lot of tremendous value.
Okay, great. So, we've spent some time just thinking about what some of the measures are that you're looking at. And I wanted to think about how you go about communicating the results. And I guess part of it was through the dashboard that you talked about.
Sure.
And that's one way that you have of trying to capture that. Who's responsible for capturing sort of the results and where we are and then diffusing that or disseminating it throughout the organization?
Yeah, sure. We have... in essence, we have a marketing research capability that is now language, business strategy, and insights, because they do a lot of total company strategy, not just brand strategy. And they will I'll call them Switzerland. So I get a neutral, uncensored view of the facts. And they'll work very closely with the vice president of marketing, and they'll distribute on a monthly basis the demand dashboard. And the management board gets visibility to that. We get in a room every month, all of the marketers and all of the sales leaders get together and they review the dashboard together. And the directors co-present and they go through what we call a red, green, yellow, what's working, what's not, and how do we quickly redeploy.
Actually, I think of McNeil as one of the leaders in this area. You've got great data, you've got tremendous analytics, and you've got some rigor in how you go about trying to sort of communicate and keep up to date with where you are. Is there anything that is really missing that you wish you had better analytics for, you wish you had better systems for?
All in one dashboard, I'd say. Now I become president, and so I got used to driving my department off of a demand dashboard. And now that I've become in the president's role, now my new wish, and we're working on it, is a complete business dashboard where I've got not only my demand dashboard, but I've got some of my supply dashboards on case fill rate, on GP, on forecasting error, and a compliance profile, as well as my new product dashboard. And those three areas coming together in one on a timely basis is what we're in the works on.
Wow. So, but you described earlier, I've got 5 measures I really pay attention to. If I start getting them from all these different areas, all of a sudden it really proliferates.
Exactly.
But it'd be nice if they were interconnected.
That's exactly it. I mean, right now you've got the demand organization off and running on the demand dashboard and the supply organization that has, like any manufacturing capability of, how's your customer service and how's your GP and how's your compliance profile. We're a highly regulated industry. And then you've got all our R&D folks working with our marketers around new product pipeline. So what kind of sales turnover are we doing every year from new products? And those 3, I call them capabilities, really, they all ladder up to profitable growth. And making sure that every dollar spent on the company, we have precious resources, so it's how do we deploy our resources.
So I'm glad you bring up new products. When I think about new products, do you have any key metrics that you sort of look at about your new products?
Yeah, we do. Actually, we look at, the goal we have is to have what we call a 40% freshness index, which looks at the total percent of new product sales turned over the past 3 years. And we look at fully loaded sales, and we always look at incremental sales. And again, sustainability of new products is the most important thing. And so that gives you a 3-year look. We're actually look, because we're a regulated industry, at a 5-year look and a 3-year look. But what it does is instantly align the company to say, hey, this is a macro goal that the company needs to deliver on an annual basis. And by 2009, we have to have 30% done because, first quarter we have to have it all the way up to 40%. And the past 2 years, we've delivered 40% turnover.
Wow. For a company of your size, that's pretty impressive.
Right.
So What's your relationship with your vice president of marketing? And has it changed since you've moved from vice president of marketing to president? Or what is that relationship?
Yeah, I think that it's the best is, I'm a marketer by trade. And so, Johnson & Johnson's not getting the best out of me unless I'm getting dirty a little bit with that. And it's in my soul, and it's in my passion. And so, number one strategic hire for me is vice president of marketing, because I need someone who can do it better than I could ever do it. Otherwise, I will be an unsuccessful leader within J&J. And so it's getting someone who is going to add some nice diversity, think differently than you. So my current vice president of marketer is very different on the profiles. I'm a highly extrovert. He's an introvert, actually, as a vice president of marketing.
A vice president of marketing that's an introvert?
And a vice president of marketing, when you'd meet him, you wouldn't know he's an introvert, but he is an introvert, and highly analytical, but magically creative. And I think that the combination of having someone who is, really strong in both of those. Not to tell you, in this day and age, the marketer, given the role they play for companies, you need to have the leadership component in that. And that's what's really changed, I think, over the past 20 years. Are these VPs of marketing, they need to be smart business people. They need to be creators. They need to say, every day, what am I causing differently? And they need to be master marketers. But also, most importantly, they need to be born leaders, because as they go, the companies go. I mean, the marketers create all the work in the company. And so that savviness, that if I'm going to take the company in this direction, I have an accountability to move the organization with me.
When I talk with heads of marketing from various different companies, one of the issues that is often discussed is whether they have a seat at the table or not.
Yes.
Does the VP of marketing at McNeil have a seat at the table?
The VP of marketing is on the management board and in a critical decision-making role. They own the P&L decisions. And so they're 100% accountable for all of the marketing budget. They're 100% accountable for the sales target and the consumption target.
And for the strategy going forward?
And for the brand strategy and the company strategy going forward.
And I assume the head of finance similarly is at that same table?
Yes.
Okay. And we already talked about how the relationship between actually all three of those offices, yours and finance and marketing, is all at the same table working on this together.
Yes.
Okay.
I think what's really progressed, Steve, at least even 5 and 10 years ago, marketers can't do this by themselves, because you can't have a plan without execution. And what is particularly in big companies, we're a $2 billion company. So in addition to the CFO and the president, the VP of marketing needs to be absolutely aligned with the supply chain. McNeil, we're the largest supplier of pills in the world. And so I can't have my vice president of supply with a different dashboard that's not in sync. And the way you get that is a total company and a cascade from that. And then they're speaking each other's language.
So this is your moment. I'm going to hand you the mic here. If you were going to give advice to chief marketing officers, the VPs of marketing, what advice would you give about how to interface with the president or CEO of their company?
So I would tell them, first, I hope they love their job, because they got to be passionate about it and honestly be talented at it, because you're going to have a miserable experience because of, you're in the center of gravity and the world is always looking at you. So, the first thing I'd say is, start to drive your business off a dashboard. Start to understand what drives your business. What are the causalities? And the faster that you can get clarity to that and get that on paper and start to consistently talk off of a rhythm of that, you'll get alignment faster. You'll make P&L redeployment decisions faster. Your whole department will be aligned. My commentary to that is really the heavy science. And after you know the science, that gives you about 70% the way there. Then you can apply your art on the other 30%. And that really, for me, is a competitive advantage.
Ashley, anything I didn't ask you wish I did?
No, I want you to know when I want to look to the industry to say, how do you help some of the 4 leading companies with consumer engagement? Because I think that's an area that we are quite interested in, is in addition to the tried and true conventional tools, how do we start to meet the consumer where they are and better understand some new ways to connect with them and measure those versus the traditional GRPs of television?
Okay.
Thank you.
Ashley, thank you very, very
You're
much.
welcome.
That's all the time that we have right now for Measured Thoughts. Join me in thanking Ashley for being with us today and sharing her insights.